As we're about the midpoint of the day, but we have this very important Fed meeting. We all think we know what's going to happen. Jim, you and I were just talking before the show about the backdrop, about where we're sitting. Sort of frame it up for us. I think we all know what we think is going to happen from the meeting.
Well, we have a Fed chair and a Fed open market committee that doesn't like surprises. So I think the 25 basis points is probably baked in at this point in time. It would be a very big surprise, which they don't like to do more than that, to do 50 or to not cut at all. So let's just assume the 25 basis points is in there. I don't really know what the verbiage is going to be. I doubt this is going to be a hawkish cut where they start talking about, how they may have to maintain a restrictive stance for quite some time. That would be surprising as well. But I think what's more germane to your question, Courtney, is that we've had a market that just inexorably marches higher. I took a look today, and since late April, when we got past the post-Liberation Day blues, there's been exactly 3 days in which the S&P 500 has closed down more than 1%. Now, that's not unheard of. That's not the great moderation, but it has been a very tranquil environment recently, and that, to me, says that a lot of this rate cut tomorrow is probably priced in. I wouldn't be surprised if we give something up in the wake of it. But that is not something that you should take from my lips and say, oh, I'm going to go sell stocks, I'm going to go sell the markets. That's not the point. There are too many positive things going on in the markets right now. I mean, take your pick, and I don't want to steal from either Stephanie or Josh. I'll leave some on the table for you. But, obviously we've got... I know. We could do this. All three of us could do it together. We've got a growing economy. Sure, we've got some worries about the labor market, but we still got low unemployment, deregulation, growing profit growth. I'll stop there. The setup is very positive, even if you get a pullback on the news tomorrow.
Why are we then sort of marching just slightly lower here, Stephanie? If we think we know what's going to happen, what's guiding us today?
We're up 32% from the April 8th lows, right? So we've had a lot of good news. We are slowly ticking off the boxes of the unknowns with tariffs, and we'll get Fed and inflation and geopolitical issues.
Lisa Cook is going to be there, it looks like. Can't fire her before the meeting. Which
is interesting in and of itself. So we're ticking off the boxes we have been since April, and as a result, we are grinding higher. We have grinded higher. And then I would say a lot of it is because, yes, the economy is strong, stronger than probably even we thought starting the year. At
you know where Atlanta Fed is. You looked, right?
I know.
3.4.
Yeah, about 2.5–3% growth, which means and has translated into much better earnings. And that's really what the equity markets really care about, is the direction of earnings. And earnings have been revised higher, and I think they're going to go higher even from here. The consumer is the most important part of the economy. It's 70%.
You know I agree with that.
I know you do. That's why I started with that. But they have jobs. They have wage growth at 5%. Inflation is coming down. You have a manufacturing renaissance happening. Anything tied to data center, we've been talking about it for 3 years. The labor market is cooling. It's not collapsing in my mind. So the Fed can ease. They probably should ease, but it's from a position of strength in the economy in my mind. So I think if we sell in news, I'm buying. I think the fourth quarter, I think you got to get through September. It's kind of volatile. I think fourth quarter is going to be quite strong. I think earnings are going to continue to lead the charge. And I think the broadening out in the market is very refreshing. I still like tech, but there's a lot of other places that are doing well. Financials, industrials. I like consumer because that sector's lagged, and I think that's going to play catch up.
Yeah, absolutely. And I want to dig more into that. And Josh, we got to get you in. We know that you're here. I mean, the August retail sales coming in much better than expected. It does seem like the wealthiest of Americans are really sort of pulling along the economy. Maybe I'm too much of a worrywart, but every time these numbers keep coming in stronger and stronger, I'm surprised.
Okay. Well, I was surprised to hear James Xavier.
Josh, I don't think we can hear you. We're going to work on that. I'm going to go back to Stephanie for just a second while we work on that, because I want to pick up on this thread about the retail sales and then the Bank of America consumer spending, also another month of healthy spending growth. So if the consumer is an area that you think is going to continue to take off and they're lagging now, where should we be looking?
Well, the ones that I own actually haven't done well this year, but I do think you're going to see a catch-up.
Maybe they will. Yeah,
I think so. Look, back to school we know was very strong. You just mentioned credit card data. I look at the Chase data, and we actually saw an acceleration in August from July in terms of spend. American Express said that July and August accelerated from June. So we're hearing from companies, we're hearing from the banks. Every bank last week at Barclays said how good the consumer was. So back to school was good. You know that's a good precursor to holiday sales, and I think I own Deckers, for example. Now, I'm kind of flat in the trade. It's down 43%. That's why I bought it, because it's down 43% on the year. But they've got some of the greatest brands in terms of Hoka, in terms of UGG, and double-digit earnings growth and gross margin expansion, operating margin expansion. Yes, it was very expensive, priced to perfection. Now I don't think it is. I like the Gap. If we have a denim cycle, which my daughter, my 18-year-old, says we've had a denim cycle for a while and we're going to continue, they're number 2 at Gap and they're number 3 at Old Navy, and they've been taking market share. Target is a little harder. It's a turnaround story, but it's trading at 11 times earnings with a 5% dividend yield and a new CEO who knows the company very well. He's a lifer there, and that was disappointing because we wanted someone from the outside, but I like having someone inside making some of the changes there. So, and then of course Chipotle, which announced their increase in their buyback last night, and the stock is trading, at 29 times forward. Its historical average is 46 times.